Jared, good to see you. Where are you, my friend? Are you in South Carolina? Where are you?
Yeah, I'm in my house. I'm sitting in my office, and
How? Yep, go
thanks
ahead.
for mentioning the book. The book Rule 62 is out today. We'll talk about that in a little bit. So
Yep, that's great. That's great. So, um, Jared, I borrowed the line from William Goldman, a screenwriter from Hollywood, coined it about. You know all these things probably. You probably heard of this one, but I think it was in 2016 or 2017. He coined the phrase "nobody knows nothing," and I guess a good place to start would be in this world of FinTwit and mainstream media and all the furus and the narrative volatility. It just seems like we keep buying low and selling high. Sorry, buying high and selling low, and it's wash, rinse, repeat. So I don't know. What's your take on what's going on? I just think it's got as much to do with positioning as with everything else, and it's the uncertainty. I guess you could say probably the last few years uncertainty's diminished somewhat because the tariffs are kind of receding in the background, and the Israel thing kind of for the time being seems to have stopped. I think there's still plenty of trouble out there, but there's always things you can worry about. So, how would you character what's top of mind for you? What's your strongest conviction? It may just be that you're firmly neutral because on the one hand, on the other side. So, Jared, why don't you take over and just highlight whatever you feel like talking about? The floor is yours.
yeah, sure. So let me just say, like trading wise, I've had a tough run the last couple of weeks. I've gotten everything wrong. Um, got the Israel Iran war wrong. So generally, let me just kind of back up and say that people have been trained over the last 20 years to fade geopolitical risk. Somebody drops a bomb, if there's an attack, if there's some kind of explosion somewhere in the world, what do people do? They sell oil, they sell gold, they buy stocks. And for some reason, I can't get this through my thick skull because every time there's a geopolitical event, I am always on the wrong side of it. Um, and I think that's partially because at heart, I am a long gamma trader, right? If you're fading geopolitical risk, you're a short gamma trader. You're picking up nickels in front of a steamroller. You're,
Yeah,
um,
Jared, I have to interrupt you just for everyone, folks in the room. If you could just give 10, 20 seconds on what long gamma means, because some folks may not be able to keep up with you.
yeah, it basically means to be long optionality, right? So you're gonna spend a little bit of money with the potential of making a lot. And if you're short gamma, you're collecting a little bit of money with the potential of losing a lot, right? So, for example, if you were to sell WTI at 75 bucks on the bombing, you could make 5 to 10 bucks being short. But if Iran closes the Strait of Hormuz, you're going to be short all the way up to 120 and you're going to get carried out, right? So I don't like those kinds of trades. I don't like the risk reward. So generally with geopolitical events, I'm usually betting that things are going to get worse and inevitably they don't. They always get better, right? So here we are after this 12-day conflict and we're supposedly at some kind of detente. But still like in my heart, I believe that the ceasefire is going to be difficult to enforce. Iran is not going to change its stripes overnight. They're going to be acting out in myriad ways through militias and, assassinations and everything else. So basically, my core belief is that this war has unleashed permutations and combinations and chaos and entropy, which we cannot really foresee the consequences. Now, if you look at the price action in stocks, I'm not going to argue with the price action. I'm not going to short stocks. Like, especially a day like today, kind of a low vol grind upwards. It's not the kind of market you want to short. It's not a market that looks toppy. You have the Nasdaq putting in new highs. I really have no business shorting that. I'm kind of more focused on the FX world. I believe that in the long term, when I say the long term, the next 5 to 10 years, maybe less, 3 to 5 years, that the dollar is going lower. But I believe that in the short term, we are set up for a very large bounce in the short term. and that's the way I'm positioned in the short term. I'm betting on a bounce in the dollar, and you know it's been very painful waiting for this to happen. So, like I said, you probably should have talked to somebody else today. You should probably talk to somebody who's been getting it right, because I've been getting it wrong. But happy to continue the
Yeah,
conversation.
no, Jed, I appreciate your candor and humility about that. We all sometimes the market makes you look smarter than you really are, and it's look on no hands, and other times it makes you look dumber than you really are. And the truth inevitably lies somewhere in the middle. So let's just pick up on some of the things you said. There's just a ton to talk about. Let's start with the dollar. Okay, so I agree with your long-term assessment, and we can get into it, but I don't know if it's Captain Obvious for a lot of the people in the room already. But I guess what I would question you, because you're a veteran trader and you got a better handle on sentiment and short-term gyrations than I ever do. But I'm just kind of wondering, like, I remember Dennis Gartman, who, people take shots at him, but there's some wisdom in what he's written over the years. One of the rules I'm a big believer in is you want to stay with trend. And you always say, in a bull market, you always can be longer flat. And in a bear market, you can only want to be shorter flat. And like trying to go counter trend is like usually the odds don't work in your favor. I'm just kind of wondering if that triggers you or what your response to that would be.
Yeah, I mean, I would say that counter trend trading is done by a small minority of people. I've been doing this for 26 years. It's in my DNA to fade trends. I have been doing it my entire career. And if you are in the business of doing that, you have to get a couple of things right. First of all, your entry points have to be immaculate. You have to have perfect entry points. Otherwise, it gets very difficult. Second of all, oftentimes you are entering a trade when it feels the worst, right? Like, for example, right now with the dollar, like if you were to buy the dollar right now, it feels terrible. The price action is terrible. The sentiment is terrible. Everything is terrible. You feel like it's you against the world. And I actually haven't been posting on Twitter much these days. And I'm kind of glad because if I was like posting bullish dollar stuff, like I'd be dealing with all these trolls and all that stuff.
Isn't that the
So,
truth? Isn't that the truth? Yep, 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 yep.
but like I said, your entry points have to be perfect. And I mean, even though I've been fighting this for quite a while, I'm really only down a couple hundred basis points. So it hasn't been too painful yet. And it's really just, and the other part of it is, I'm sitting here wondering, well, what's the catalyst? What is going to make the dollar go higher? I thought maybe Powell today would have this fire breathing, hawkish speech. Maybe that would make it go up. Maybe it's going to be some piece of economic data. I don't know what the catalyst is, but I can say that the FX markets today. You mentioned October of 22. I think the FX markets today are at sentiment levels like equities were in October of 2022. I think the sentiment is that bad against the dollar. So
Right. So let's get down and drill a little deeper. I was talking to somebody yesterday. Someone had me on their podcast, and I just noted, particularly as when the bombs were flying. I mean, usually in a flight to safety trade, this is just going to pour gasoline on your fire about price action being terrible. In a flight to safety trade, you would normally expect bonds to go bid and the dollar to go bid. And I think the euro's back up to the highs right now, and the yields are only down, I don't know, 5 or 10 basis points from where they were before. Do you know what hit the fan? And so I look at that, and I just reminded of Stan Weinstein. It's not the news, but the reaction to news that counts. And so, like, I want to be mentally flexible, but in your own mind, you must have sort of like, debits and credits in your head to your thesis, and you're probably constantly monitoring, like, did this price action confirm or, refute my thesis? And as we've gone along, has your conviction level increased or decreased in your position? Because, life is not linear.
I would actually say it's increased. But I want to talk about bonds for a second. You mentioned
Yep.
bonds,
Yep.
and I don't have a position in bonds. The price action is very confusing to me. And like you said, you should have had some kind of flight to safety bid, and it didn't happen. But at the same time, the price action hasn't been terrible. When I look at the chart of tens or thirties, it doesn't really speak to me. It's kind of in the middle of the range.
Yeah,
It doesn't look extremely bullish or bearish. Like if I put anything on in bonds, it would be extremely low conviction, and I don't like to put low conviction trades on. So I don't have a view there.
got it. So, Jared, let's move further. If you, I want to keep it, we'll keep the ball moving on the floor here because I want to get other people in the conversation. So, let's talk about sentiment a little bit. I mean, there's something there for everybody. You can you can put hard data, soft data. Retailers are killing it. That's a bubble. Institutions are underway because they puked everything, so they're getting implicitly squeezed and not explicitly squeezed, et cetera, et cetera, et cetera. So keep all your subscribers and your most useful contras in the federal witness protection program. But as you look around, it's the wrong way, Louise. It always call you at the wrong time. Like, should I buy a video here? Or, whatever. Okay. So you look at your contra indicators. What are they telling you right now?
Ah, God, contraindicators.
Or let me put it another way. Well, I'll make it easier for you. October 22, like you were feeling it. I
Yeah.
mean, again, you couldn't, prove it with physics markets never work that way. All right. But you were feeling it. Okay. You were in the zone. You were radar. You were locked in on that. Okay. And you were right. So, like right now, is it that is it just there's too many? They just line up in a way where you just can't develop strong. I mean, like on equities, it's good until it's good until it's not. I mean, you just can't draw a strong conviction right now. And by the way, again in the line I stole, I bastardized. If you use this, you got to give me credit. To paraphrase Alan Greenspan, if you're not confused, that means you're not paying close enough attention. All right, because I mean, you can be firmly neutral because on the one hand and the other hand, and I respect that if that's where your head's at. So which way are you drifting here? Like as markets go up, you're starting to say, "Uh oh, the balance of risk is starting to tilt the wrong way because price is up so much," or you're like, "Nah, people still can get squeezed in here," or it's kind of like, you know what? I'm not going to waste my time with equities right now because you said earlier I got more conviction on currency, for instance.
Yeah, I mean, the one thing about sentiment is that you have a lot more data points with equities than you do with FX or bonds or anything else. Like, people care more about stocks, people post on Twitter more about stocks. You just have a lot more sentiment data points, and it's kind of easier to gauge that, which is why I think my conviction was so high back then.
Right.
Um, and stocks in terms of now, like, it, I mean, the market kind of stopped where it was supposed. Let me back up a little bit. I did trade the tariff crisis very well. I actually did terrific on that. And we've had a rally, up above 6,000 in the S&P, and it kind of stopped where it was supposed to. And I think today was a little bit of a breakout. So the price action today in particular, I was like, if you're a bear, like you don't like to see it. So yeah, I don't really I kind of have like a busted put spread in the Nasdaq that's probably going to go to zero, and
Right.
it's a small position, and I don't I don't really have a view on stocks here.
Okay. That's
Again,
fair.
it's yeah, it's kind of like, I mean, I think the right trade is to be long, but I can't bring myself to do it. So
By the way, Jared, that's great. That's terrific. Let's move along. We'll come back to stocks later, but I want to go to something else that you've been in the vanguard against, and you were, I don't want to say early. I mean, it's the begin. It's the end of the beginning. Maybe it's Jesus. We're in the second or third inning of this. So, and but you've been honed in on the right issue, in my view, and I'm talking about private equity and the illiquid crap. And you were one of the first ones to call this out. So maybe you could just, for the folks in the room who probably been following us closely, explain a little bit. And where are we in that story? Is finally trains pulled out of the station we expected? Is it going to take longer because they keep kicking the can? Or like explain why this this black swan or gray swan. We're circling overhead right now. And where's your mark to market on private equity and privates in general? Private credit. But I'll tell you about a private credit lunch I went to the other day. But go ahead, Jared.
Yeah, yeah, like you said, I was really early on this, and that has not been profitable. Um, I started buying puts in Blackstone when it was about 120 back about a year and a half ago, and then it went to 200, and now it's back to like 140. Um, I mean, I think all the thesis for the trade is intact, and I think when you're seeing endowments trying to liquidate private equity holdings, I think if that starts to happen in the aggregate, then it's going to call into question, like, if I'm Yale and I'm selling 2.4 billion of private equity at 85 or 90% of par, then what does that mean for the marks in the portfolios? That's really the big question. And I think everybody knows that the holdings in these funds are very aggressively marked. And Cliff Asness has talked about the whole volatility laundering thing. He made some jokes during the tariff crisis. The market was down like 6%, and he's like, "Well, private equity is on." I think everybody knows how that works. I do think that that is going to be the source of the next crisis. It's kind of like a slow detonating bomb, and the financial crisis was a little bit of a slow detonating bomb. But people started to sound the alarm in mid to late 2005, and it didn't really crack until the summer of 2007. So it's just going to take time. It's just going to take time, but I think the publicly traded private equity names or private credit names, I think some of them are going to disappear, and some of them are going to be trading at 20 cents on the dollar, and that's what it's going to look like a couple years from now.
I happen to share your views, and maybe we can get TX Kitty to come up here because he traffics in fixed income and he's been all over this as well. So if TX can break away, it'd be great to hear from him. So, Jared, I went to a lunch last week in Midtown for a private equity firm that shall remain nameless, sponsored by a second tier broker dealer. And it's like, and probably you've been subjected to this as well. Like, why are we getting all these solicitations now? You're retail investors. I love when they talk about, hey, TX, hang on, don't say anything, TX, please mute yourself. And I love when they talk about Jared. When I hear, democratization, democratization of private equity, or democratization of private credit. Anyway, this was a private credit lunch, and they put the graph up there and they show you over like 15 years how private credit has done just as well, if not slightly better than the S&P. And I'm sitting there, I'm doing my Columbo Peter Lynch stick. I'm trying to be nice because they bought the lunch. I don't want to piss in the pool. And I'm listening to this whole thing, and I'm like, wait a second. So I asked, I played dumb. Not hard for me to do. I says, let me understand this. You're lending to people at SOFR plus 500, so you're getting like, I don't know, 9.5%. Somehow you're returning 10.5% to the investor. Like, could you explain to me, given your cost of capital and your expenses and all this stuff? He's like, oh yeah, well, there's the one turn of leverage. Oh, leverage, really? Tell me about that. I'd like to understand that a little bit. Well, in any event, Jared, they had this linear line going from the lower left to the upper right. I mean, it would make Bernie Madoff jealous. Okay, the thing never freaking went down, and I was like, oh, now I get the grift. I mean, I was just like, you gotta freaking be kidding me. So to me, and I'm curious how you think about this, the fact that now going out to democratize private credit, all the private wealth guys, and all that nonsense, what does that say to you about their source? I mean, they need constant inflows of capital to keep the Ponzi going, right? So, given that the toilet's backed up, the Yales and Harvards of the world, are not working out anymore. Oh, I know. Like to me, it speaks of there's trouble coming over the hill. I mean, the fact to go out to retail investors, that's not usually what you see at the beginning of the move. No.
Man, the whole thing with trying to put private equity in 401ks and stuff like that, like it is. It's classic Wall Street. Like retail is the last one in. I
Yep.
mean, the thing with this bubble, and I'll call it a bubble. I mean, the thing with this bubble is it's it's very similar to the financial crisis, and I actually talked to somebody who went to one of these private equity lunches recently with a private equity firm that will remain nameless,
Yep.
and he's like, the presentations are slick, the
Yep.
slide decks are slick, like they're perfect, they're it's they I mean they just give you all this incontrovertible evidence
Sure.
that private equity will never fail. And again, just like the financial crisis, it's the crazy newsletter writers with long hair, it's the oddballs, it's the freak shows that are that are that are saying, look, like this is a Ponzi, like it's going to end. And nobody pays attention to some weirdo in South Carolina, like I mean it's just
Yeah, I know, Jared. You're totally right. And, it doesn't matter till it matters, and
yeah.
it's just crazy. All right, so hang. Let's hold for 1 second here. So let's go further into the privates and the illiquids. So TX, if you're there, could you please speak? Could you please unmute yourself, TX?
Yeah, I'm here.
Yeah, hey TX. So TX meet Jared. I don't know if you guys know each other, but
No.
Jared's been well out in front of this whole private nonsense. And TX, you talked a lot about the BDCs a couple months ago, and they took a big dirt nap, if I may say, since you mentioned them. So
Yeah.
TX, what are you seeing lately? What are you seeing in the fixed income and all this nonsense, the credit, so the stuff that we did us dumb equities guys don't see. So maybe you could just update us a little bit, TX.
I mean, on the BDC side that we talked about the first time, I was just looking at what's out there, and you have marquee names in terms of sponsors because again, you have to understand that BDCs are essentially bankruptcy remote entities or SPVs that have sponsors like Ares Capital or Bain or Blackstone or Goldman Sachs or there is a variety of them. And I'm just looking up here on a list, and you have BDCs. I mean, the top 10 in terms of yield go from 15% to 19%, which gives you a sense that something is definitely wrong in the credit side. The problem is that the disclosure on what those BDCs are. So those BDCs, just to be for people to understand, I mean, they own essentially private loans, not syndicated, of medium-sized companies that can go, I don't know, from maybe 30 million to 200 million EBITDA, give or take. And they're generally going to be the sole owner of those loans that are generally based on SOFR plus 500-ish. So you're talking close to 10%, give or take these days. And they are 5 to 6 years in general. So the fact that the top 10 of the BDCs on the yield basis yield from 15 to 20%, if the underlying assets have a yield of 9 to 10, that means that there are serious doubts. I mean, if it's traded at 20%, it's essentially trading at 50 cents on the dollar, which begs the question as to whether it's the underlying credits or it's the desperate need of people that own those relatively illiquid instruments. I mean, they're not instruments, they listed on the stock market, by the way, but they are relatively illiquid. So yeah, it begs the question as to whether it's the underlying assets that are in bad shape credit wise, and or a mixture of liquidity needs by the folks that own those BDCs. Because again, those BDCs they trade poorly. I mean, liquidity is shit. So that's the first thing. But you have a host of them. I mean, the 20th on the list as a 12% yield, which in this day and age is still pretty
Wait,
large.
wait, wait, wait. TX, the 12th on the list is still yielding 20%. Is that what you said?
No, I said the opposite. The
Oh, 20
20th,
is yielding 12%. Jesus.
exactly.
Wow. And by the way, TX, one thing I forgot to mention, maybe you can respond to this. And Jared, I'm sure you've got a reaction to this. So this lunch I went to, it's one of the top private credit guys. I don't want to mention names, be unfair to them, but they have a pretty good record. But one of the charts, and Jared, you mentioned about the presentations being slick. They point out they started doing private credit, I think, in 2004. And it's the old, what is it, the old Warren Buffett line, what the wise man does in the beginning, the fool does in the end. Anyway, they had this graph of the number of companies involved in private credit, Jared and TX, and it was like five in 2004. And I may be wrong. I want to say it's 535 now or some crazy number like
Oh,
that.
oh, yeah, yeah. No, absolutely.
In TX and Jared, whenever you see over time, it's where you get the biggest extension of credit is ultimately when the car crash first occurs. So TX, like you look like the last year or two, you've had guys who like, oh, this,
And
yeah, you could have TX. Hold on a second, you could have. I'm making a nice joke at Jared. You could have some wacko in South Carolina saying, "Oh, this looks like this is easy, no problem." What I'm trying to get at, Tix, do you have people who just some of the later entrants to this area just like it's like you just want to like shoot yourself in the head, like this is just like total craziness?
yeah, I mean, it has become. I mean, when I was still on the business side, 5 or 6 years ago, it really began to shoot up, and you had a host of firms and or companies that just sprung up, and they package themselves as being specialized in healthcare and being specialized in this and being specialized in that. I mean, at the end of the day, they are mushroom to, yeah. I mean, easily in the hundreds, because you also have offshoots of all those big mega firms like Apollo, Blackstone, Ares. All those guys have several funds on top of that. And all that stuff, as I said, it's not syndicated. It's totally liquid because there's just no
Right,
market, no
right.
secondary
Yeah.
market, unlike syndicated loans. And the only secondary market is essentially a couple of brokers on the West Coast that specialize in secondary trading of LP interest, limited
Oh
partnership interest.
God. Oh, I just so hold on, Tix, give it a rest for a second. Hey, Jared, you've probably been all over this. This secondary market and LP interests, like what the Like, I mean, some of the marks in that market I've seen aren't terribly impressive, are they?
Yeah, I mean, actually, that's going to be. I think that's going to be a pretty good source of information for when things start to go sideways. I mean, there's been secondary markets and LP interests in VC firms for a long time,
Yes.
and also private company stakes and stuff like that. Like, there's secondary markets in that, but for private equity, like when things start to croak, that's where it's going to show up first. You know.
So TX, just hang there for a second. I want to widen the conversation a little bit. So Jared, when you look at this, the private equity, the private credit, and I also put up in the nest. Sorry to be a jerk about this, but Pompliano came out with a SPAC and raised, I don't know, it was 750 or a billion or 400, I can't even tell. So Pomp just did a SPAC, the reverse merger to go into crypto. Dan Ives, he started an ETF a couple weeks ago. And he's got 100 million already in it. I mean, like Jared, knowing you, like you wouldn't want to miss a good party if it started to gather some momentum. So is this catching your attention, or it's just like the drinks are gonna keep flowing, and to try to call the top of this thing prematurely is just a fool's errand.
I think I'm trying to call the top of anything prematurely is a fool's errand. But I'm curious, what's Dan Ives ETF? I haven't heard about
Oh
this.
yeah, look up in the nest. It's to invest in. Wait for it, the Max Seven. Okay. Oh, you missed this one, Jared. It's got to come out with a newsletter for one of your daily editions. Look it up. And by the way, the SPACs. Okay, so the DNIs. Look, it's in the DNIs AI the AI ETF. It's from Yahoo Finance. Just Google it. Tops $100 million in AUM in just the first 5 days of the launch, and that was on June 17th. So that was just like a week ago. So you haven't missed anything, Jared. But this looks like it could be lining up nicely. And then I also put in the nest. If you look, I mean, this is one for the scrapbook. There's a picture of Dan Ives with his. I gotta get me a. Hey, Jared, do they have a haberdashery like this down in where you are? I want to get a lime green coat like
No,
this with
I don't want to
those.
take styles tips from Dan Ives. I don't. So
Well, how about your hairstylist? Can we get a Tom Lee hairstyle here? I mean, no, but Darren, I mean, I'll DM you the tweet. I mean, I don't know if you can see it in the nest, but it is again. I file that under things you don't see at the bottom. This is
yeah.
just insanity. But I mean, so let's go back to sentiment for a second. So you said so many times, Jared, and others have as well. Sentiment change, price changes sentiment. All right, and like I just read a research note this morning from some guy who's been bearish the whole way, and now he's calling for a rally in small caps and high beta, Kathy Woods, ARK, all this stuff, and I'm like, what? I mean, so I keep coming back to the same point. We're not. I mean, you're just starting to see things, but these are just. This can go a lot further. I guess is what I hear you saying. No, possibly.
Uh I guess. I mean, I don't I don't really have a strong view. I don't.
Okay.
It's I mean, look, like there hasn't been anything that's like screamed out to me like, oh my god, this is the sentiment signpost, like this is the top. I don't think we're there. Um I would say equity sentiment on a scale of 0 to 10 would be like a 6.5 or 7 right
Great.
now. It's on the bullish side, but it's nowhere near peak.
Got it.
You know,
Got it.
so basically, like you just things will get more and more ridiculous. Like if you think the Dan Ives ETF is ridiculous, it's going to get more ridiculous. It's going to get absurd. Like it's going to get
Right.
absolutely absurd before it's the end. You know.
All right. So let's move to a couple particular items. So I know you've been correctly bullish on gold. So maybe update your thoughts there. What do you think also about crypto? Because Dilly, just to your left, has been correctly bullish on Bitcoin, not crypto, Bitcoin. Now the shit coins are doing
Yes,
terrible.
thank you for
Yeah.
yes. They're very
So
different.
Jared, just let's speed round this gold, um, where I know you have a view. Bitcoin, where I'm not sure what your view is, and then energy, which oof, it's a tough one. So those three: gold, Bitcoin, energy. You want to weigh in on any of those? If you don't have,
I'll weigh in
if you
on
don't,
gold. I
yeah, if
mean,
you don't, if you don't have strong views, that's fine. It could be in the too hard pile. That's fine.
yeah, I mean, still bullish on gold. You're looking at, I mean, gold is the most chartable asset in the world. Like, it doesn't trade on fundamentals ever. Like, it was funny. Somebody mentioned to me the other day, we just dropped a bunch of bombs in Iran and gold is unch. It's like slightly down. And I'm like, yeah, that's how gold behaves. But then it'll ramp when you least expect it. So it's kind of like doing a ascending triangle right now, a little bit of a consolidation. Price action was pretty terrible today, but it's still within the consolidation. So, I've been, this isn't really new. Like, just for context, like, I started buying gold in 2005, and my bet all along was that the returns on gold would exceed those in the stock market, and it's actually slightly been the case. And I continue to believe that's going to be true. The thing that's, if you do want to talk about the fundamentals with gold, the deficit problem is intractable. It's intractable. It's not getting fixed. I did have some hope that Doge would cut a trillion or more. I did have some hope that we do something with a big, beautiful bill that would cut the deficit. None of it has happened. The deficit's going to get bigger. It's going to end in monetizing the debt, and gold is going to go parabolic. I don't know if that's going to happen this year, next year, 5 years, 10 years. I don't know, but I would rather hold gold as a core long than any other asset out there.
Amen. Jared, you may not have a position, but do you have an opinion on Dilly's favorite asset, Bitcoin?
I think it's got some more upside. It acted pretty well during the war. It's still slightly correlated with risk, but it's been less correlated over the last few months. It's starting to act more like a store of value than a two beta Nasdaq instrument. So I think those are all positive developments. It is Sentiment is getting a little hot, but I think if you believe that we're in a 4-year cycle for Bitcoin, we're coming up on the end of that cycle at about the end of this year. I think we have more upside, 20, 30, 40% more upside. And then I would want to get flat pretty quick. So
Well, I take 20, 30, forty
I
percent.
love it.
Hey, I mean, Dilly, I don't know what else is going to go up 20, 30, forty
Yeah,
percent
I
this
love
year, so
it.
I'll sign
George
up
is
for
about to buy Bitcoin, Jared.
it.
So,
Oh, I know.
breaking news.
Jared, they're gonna burn me at the cross. They're gonna. She wants to do actually a Twitter video so people can see me push the buy button. So whatever. Um, so Jared, energy's been a tough one. When you talk about sentiment, I'm reminded by my energy nerd friends that the paper market for energy, for broadly defined, is 40 to 50 times the physical size. So people like to run around counting barrels and all this sort of stuff. But I follow Mike Rothman pretty carefully, and he makes a compelling case that changes in oil price tend to follow changes in inventory, and we've been drawing inventory globally. But there was this whole narrative going around before the world's going into recession. Doesn't seem to be the case now. Who knows? I have no strong opinion on that. That's gone away. Energy stocks are actually done okay this year, and all of a sudden on what was it, Friday? Can't even remember now. Time flies. You're having fun. Energy went crazy, and then it's collapsed 2 days, and all I know is exposures. You look at this, CFTC stuff. Okay, fine, it's lagging, but still, it shows people are out of. They're not really there, and you look at the prime brokerage data. Ditto, 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 and blah blah blah. So yes, there is a question. Do you have any strong views on energy?
I have a strong view to stay the hell away from it. I think taking a position in oil or XLE right now is probably the most dangerous time to take a position because it's really binary. Okay. So I look here are the two possibilities. Peace is breaking out. Iran is done, right? That's possibility number one. Oil goes to 50. Possibility number two is they close the Strait of Hormuz. Oil is going to 100. Like the distribution is totally bimodal. Like actually, now that I think of it, probably the best thing to do is to buy straddles, honestly. Like that's probably the smart way to play it, except I have no idea what the vol is on the straddles. So maybe even that's a bad idea. But like I think it's bimodal. I think we're either going to 50 or 100 plus and nothing else. So
I like that. That's a pretty cool setup. All right, another open-ended question. It's like this is not when I run out of questions. I love this question though. This is a new one someone gave me a few weeks ago. All right, let me see if I can remember this. This is an annoying question, Jared. So, what are people worried about that you think they shouldn't be worried about? And what are people not or concerned about? Or what are people not concerned about that they should be concerned about? Like, I share your view on, it's coming soon to a theater near us, the Liz Truss moment, the unsustainability of our fiscal profligacy. But whether the bond market's going to care about that next week or next year, I don't really know. But, someday long bond yields will go up and they don't have to go to VIBAR levels, but $50, Jared, if we just put the 10 year, say at 5.5 instead of 4.5, like, what's that do to equities? And so I don't know if bonds are the thing that you're worried about, or, this everyone's chirping now, they're all bulled up and blah, blah, blah. I mean, it's always something comes out of left field. I mean, no one had the tariffs right. No one had the Mid East right. And so probably whatever it is will be something that no one's talking about. So what are people worried about they shouldn't be, and what are people not worried about that they should be in your view? Or you don't have to answer any of that if you don't want to.
it's not that I don't want to. I don't know that I can.
Hmm.
What are people worried about that they shouldn't be worried? I mean, bringing up the bond market was actually a pretty good point because, I mean, yes, we have debt to GDP of about 120% or 130% or something like that, and but also like people have been worried about the deficit as long as I can remember.
Yeah.
Back in 2000, I used to read Barron's. Up and down Wall Street, Alan Abelson, the first page of Barron's, right? And every single week, that bastard would put in a chart of debt to GDP, right? He would put in a chart of total debt to GDP which back in 1999 was 200%. And you would see the chart going from the lower left to the upper right, and he's like, "We're doomed. We're all screwed." So at the time, I was like 25 years old, and I
Yep.
believed it. I believed this bullshit, and I'm like, "Oh my god, like short everything, like we're totally screwed." And 25 years later, like the debt is three times as big, and we still haven't had the margin call yet. So the scenario that you posed, that look, like maybe the deficit gets bigger and bigger and bigger, and they're really, you don't get that margin call, like bond yields really don't go up, maybe they actually go down, like that would surprise everybody, right?
Right.
So I think that's a really good point.
Fair. All right. So, Jared, let's turn to Rule 62. This is your, I've lost track of how many books you put out. So let's back up. This is book number what? And I gather you really enjoy writing. So, talk about the books you put out and then talk about this book.
Yeah, so this is my sixth book. Street Freak came out in 2011. Then I had a novel called All the Evil of This World. Then I had an essay collection called Those Bastards. Then I had No Worries, which was a personal finance book. Then I had a short story collection called Night Moves. And Rule 62 is another essay collection. And it's Rule 62 Meditations on Success and Spirituality. So it's kind of a self help book. I mean, honestly, it's funny. I read The Subtle Art of Not Giving a Fuck by Mark Manson a couple of months ago. I mean, I don't really need to, like, make that guy any richer. I mean, he sold 6 million copies, but I read the book, and it's a good book. But this book, as far as self help book goes, has a lot more heart, and a lot more soul. Mark Manson was writing from his head, not his heart. It's actually it's a well organized book. It's a very analytical book, but it's not a spiritual or an emotional book, and that's what this book is. So it's a collection of 79 essays, and really
79, wait, 79 essays?
79 essays.
You
Yeah.
wrote 79 essays? Jesus, go on.
I actually wrote about 120, and I cut about 40 of them to
Ooh,
put in this
okay.
book. So
Okay, cool. And how, over what period of time did you write 79 essays?
about 2 years.
Right. Okay. And so, like, give us, I don't know, like, give us one, give us a taste, tease us a little bit. Give us like one or two, or, it sounds interesting, but make it come alive. Give us like one example.
Uh, I wrote one called "I'm Offended." Okay, and I kind of talked about social media culture, and I talked about the idea that if I write something on Twitter or anywhere in my newsletter and you get offended, that's your fault. It's your fault, right? Because people choose to be offended or they choose not to be offended. We have a choice. We can we're not supposed to react to things. Animals react to things. Human beings don't react, they respond, right? So, if you got offended by something on TV, it's because you chose to be offended, right? And we all have a choice. So that's one of the essays. Another one is called "Saying Yes to Things." I told the story about how when I was in high school, I was down in Georgia. I went to the movie theater. I held hands with this random girl. The lights came on. She wanted me to ask for her phone number. I didn't ask for her phone number. Obviously, everything worked out. I've been married for 28 years, but damn, I wish I asked for her phone number. So there's
That's that is awesome. Hey,
Yeah, so
Jared,
there's all kinds of stuff like that. And then at the end, it gets really spiritual. I talk about fear, I talk about resentment. There's an essay called "Happiness is a Choice." There's some essays about money and professional success. So it's really good.
that is wow. Is this is this book your, what's the most recent one? Is it, and you probably Schindler's List. I don't want to ask you what's your favorite book, but it sounds like you got a lot of heart in this book. Is this your best to date, or you wouldn't go there necessarily?
I mean, I I really like writing fiction. Like, this is nonfiction. I like writing fiction. And the short story collection I did last year, I think, is my favorite book. That's Night Moves, and I'm very very proud of that book. It's really really good. This is, fiction is harder. It's 10 times harder than nonfiction, and it's a challenge, and that's why I like it. I have another book coming out next year called The Awesome Portfolio, and then I'm working on a novel after that, which should be coming out in 2 years. So.
Are you
How
self-publishing these?
Some of them are self-published, some of them are traditionally published. Rule 62 is self-published.
That's awesome. My dad wrote some books, so
Jared,
I know how it goes.
you don't have to answer the question, but I mean, do you make any money from these books? I know publishing is hard and writing is hard, but when it's all said and done, you doing this for self satisfaction or to get get your word out, educate people, and share your thoughts, or actually, as a commercial. I mean, your newsletter, I know you do well, but just writing the books, like, is that? Would you advise anyone? Would you discourage people from going into writing books if they had to make a living out of it?
Oh yeah, you can't. It's really there's probably 30 people in the world that can make a living out of it. I got for Street Freak, I got a pretty big advance. I got an advance of 155,000 for Street Freak, so that's like
Oh,
the one
okay,
book that I made money on.
right.
Um, Probably most of my books I make like 20 or 30 grand, and that's about it. So I'm really doing it for fun. So.
Yeah, but Jared, if you want to really do it properly, like, dude, get with the program. The number of people that write books and they say it's always, New York Times bestseller, blah blah blah. That's part of the intro. So, as opposed to just being cool and in a peace with yourself, like, that's interesting. Jared, at what age and how did you get interested in writing books?
Um, so I wrote my first one when I was 36.
Yep.
And I really had no designs on writing a book. There was a literary agent that found me after Lehman collapsed and like talked me into writing a book. I didn't plan on writing a book. Like he talked me. I basically got recruited to do it, and it ended up being a huge success. And that was kind of what started it.
So, do I infer that you actually enjoy writing books?
Yeah, actually, I do. And one of the things I like about it, and there's actually an essay in Rule 62 called Legacy. And I talk about the idea that, leaving the world a better place than where you found it. And, we're all going to die someday. Nobody gets out alive. And I really want I want to have books that I leave behind that future generations can read and enjoy after I'm gone. Like that's really what keeps me going.
Wow. How are you able between the newsletter and you're right? I don't know how many days do you write like 5 days a week? I 4 days a week, 5 days. How are you able to write the newsletter and write all these books? Like, how do you? You're incredibly prolific. How do you manage to do this?
I don't have any kids.
Okay,
So I work all day and then I have dinner and then I sit on the couch in front of the Yankees and I
right.
write and I'll write for 3 or 4 hours at night and I do that pretty much every day.
Wow.
So
All right, so Jerry, we want to hear about the cats. You got to tell me about the cats.
cats are doing great. We got
Well,
7 cats.
well, you got whoa, 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 you got seven. Okay,
Yep.
and if you as far back as you remember, like I don't know if it goes back 10 years, 20 years, whatever. But how many cats have you had since inception? Let's put it that way.
I think 9. We had one pass away in 2014, and we had one pass away 2 years ago. So we've had 9. Um, yeah, I got a good group. I got a good group, and they actually. It's funny. The cats think of themselves as a family. They really do.
Really?
Yeah.
So talk to me. So listen, I'm a dog guy. I've never had cats. So like, are cats? How would you compare and contrast cats with dogs? Like cats, dogs are like they share their emotions, put their emotions on their sleeve, and blah blah blah. And cats always strike me as being a bit more reserved and clever and whatever. But like, what is it you like about cats?
Um. They are cats. Cats are cool because they don't need you. I do have one that needs me. I have one very needy cat, but for the most part, like they're like they just like to hang out. Like they're just cool.
Right.
I don't know. Like I've been a cat person my whole life.
Got it.
So my cat's names are Stripe, Tars, Wendy, Vesper, Xenia, Yellow, and Zeus.
How do you get those names?
I don't know. We just come up with the names. I don't know.
I thought you're gonna if you started telling me they were named Nvidia, Coinbase, Circle, then I get worried. Oh God, that's all we need. Yeah,
Tesla's the needy one.
yeah, yeah. Or Jared's gonna call them Ethereum, Tether, whatever. I don't know, Dilly. So Jared, we're just going from one to the next. So Jared, you're in South Carolina, which let's talk real estate for a little bit, which is always and everywhere, to paraphrase Milton Friedman, a local phenomenon. So I know demographically South Carolina's done really well. As you would know, recently places like Florida, Texas, Arizona, Tennessee, they're kind of like, going the wrong way. But we had Melody write in a few weeks ago, and she was talking about, all the people that fled New Jersey and New York to go to Florida, they're not going back to New Jersey. They can't afford it. Some of them are going like halfway back to South Carolina, blah blah blah. But I've not heard stories, and maybe it's because the market's fine. But as opposed to some of the places further south where you are having big problems, inventory and whatever piling up, give us the view from South Carolina. What are you witnessing where you are in South Carolina as far as real estate goes?
um, I mean, it's kind of like the rest of the country. Transaction volume is down. Prices have not moved. Prices, I think, are actually going up. There was a house listed in my neighborhood just the other day at 950 a square foot. Um, it's gotten really expensive around here. Like if you go to Mount Pleasant, which is just north of Charleston, like everything is $1,000 a square foot. You're not, there's no houses under $1 million in Mount Pleasant. It's actually if you compare South Carolina housing prices with Connecticut, South Carolina is actually more expensive.
What?
Yeah, especially around like the nicer areas are more expensive. Yeah.
So Jerry, that 950 or 1,000, let's just call it 1,000 for round numbers per square foot. Um, if you go back like 5 years ago, 8 years ago, I forget exactly when you moved to South Carolina. Like, what was that pre-COVID? What was that 950 number? It was like half its current price.
Probably about 30% of its current price.
30%. When did you move to South Carolina?
2010.
Okay, so in 2010, 15 years ago, was it 30% of its current
Yeah,
price?
yeah.
Wow. Wow. It's amazing. You're telling me South Carolina is more expensive than Connecticut. So I presume it's still the case that the cost of living between, heating bills and taxes and all the rest is still much cheaper in South Carolina. The other expenses are much cheaper in South Carolina than a place like Connecticut.
Yeah, it's much cheaper. So I'm not going to tell you how big my house is. It's pretty big, but my property tax bill is $10,000 a year. And when I was in New Jersey, I was paying $14,000 a year for a 1,400 square foot house. Um,
Yeah.
So the property taxes in South Carolina are probably the cheapest in the entire country. We have the cheapest property taxes. Now, we don't have the lowest income taxes. Income taxes in South Carolina are 6.2%, which is down from 7% when I first moved here. So they're trying to get it down. It's still 6.2%. We have the highest income taxes in the South. And what that means is that we're getting a lot of migration, but it's not the right kind of migration. We're getting senior citizens. Senior citizens come here because they don't have any income, so they don't care about the income taxes, but they care about the property taxes, and that's why, like, I mean, even my town is very old. Well, like we're some of the youngest people here. Like it's a very old town.
Got it. So yeah, Jared, I recall it's been a few years since I was at your conference, but I think you had just finished your house and you had us all over. And I won't dox you, but yes, I can personally testify to the fact you have a very nice house.
Oh
So
no, that
so that
we moved out of that house. We're in a new one. We built a new one.
wait. The one I went to was like it was It was up in the. You had just built it, I think. It was like 5 years ago. Is that right? Or
No,
did you
we
build?
no, that was no, we just built one. We moved in about a year ago. We got a new house.
Oh, so
Yeah.
wait a second. So the one you're in now is even bigger and better than the other one. The other one
Yeah.
was damn.
Yeah.
The other one was damn nice. The cats are living. The cats are living high. That's awesome. That's awesome. Um, so Jared, what else would you like to touch on here? I mean, Dilly, I don't know. Do you want to dive in on something? I don't want. Jared's been generous with the time. We're going on an hour now, so I know, Jared. We talked about the book, we talked about the market, bonds, rates, whatever. I don't know. You have a strong. Well, yeah. Well, I'd be curious in your where you come from because we can juxtapose it. You know what's going on here because formerly you're in the tri-state area. I don't know. We're not going to get the results back for a while, but you're probably. I imagine you're following this mayoral race, Jared, that we
Oh
have
my
here.
God. Oh my God.
And for
I
those, yeah, go ahead. Go, no, Jared, why don't you tell folks what's going on? You're
Yeah, if
probably
if
more
this
to it than I.
asshole wins, I'm not going to come up to New York anymore. Literally, I'm done. I'm not coming back. Like it's going to be if Madami wins, it's going to be bad. It's going to be really bad.
Well,
And
you know what?
the
Yeah, go
funny
ahead. No,
thing is
go ahead.
that JP Morgan just spent 5 years building this $3 billion headquarters, and they're going to get a communist as mayor. I mean, like, I- dude, this could be the end of New York. And I hate to be hyperbolic, but I really don't think I'm being hyperbolic. Like this really could be.
Well, in Jared, I agree with you. And let me just read this to folks. I'll put it up and let me put this up in the nest so people can see it. Well, I'll read it first. This was a poll from Emerson College today. It was this morning. It was on Twitter. It says, amongst college educated people, and Jared, this is not a misspeaking or typo on my part. Among college educated people, Madami, the communist, is ahead 62 to 38. Amongst the lesser educated, those without a 4 year degree, Cuomo is ahead 61 to 39. I mean, to me, that is just staggering. So no, but I'm totally with you. I think New York's got huge problems anyway, and you throw this into the mix. Oh my God. I don't know. I don't know how this is gonna work. I mean, seriously, it's Jared, you still come up here from time to time, no? I mean, so I guess what I would ask you is, when you go to visit and you travel around a bit, when you go back to visit a place you haven't been for a while, you notice certain things which if you were living there continuously, you might not notice it. So when you come back to New York, I don't know how often you're here, every few months or whatever. I'm presuming that's what it is, or a few times a year. What do you notice? Like what jumps out at you?
Uh, I mean, look, like I lived there from '01 to 2010, which was during the Bloomberg years. It was the tail end of Giuliani. It was mostly during the Bloomberg years. And the city under Mike Bloomberg was freaking fantastic. It was so
Yeah,
awesome. And
yeah.
everybody bitched about all the expensive real estate, and everybody bitched about all the drugstores, the Dwayne Reeds and stuff like that, the banks. And I'm like, you don't want gentrification? Fine. You don't have gentrification. Everything's going to suck now. So, I mean, this guy's talking about having government run grocery stores, like, all the private grocery stores are going to pull out. Like, it is going to be insane. So,
Yeah, no, it's nuts. Gnostic, my friend, good to see you. The floor is yours. Gnostic, please unmute yourself.
Oh my God. But a serious question. How many firms are still in New York? I mean, you look at what happened to London and everybody moved out of London and started going into the little suburbs when they put in high speed. So the firms are all now living in basically little towns are all company towns for the brokerage firms. But isn't that happened to New York? I know after 9/11, everybody moved over to Jersey. Did
it's
they all
kind
move
of,
back to New York?
I mean, the only big firm that moved out was Alliance Bernstein. They went to Nashville and they had a hell of a
But
time.
I don't mean move out in that sense. I mean, they just went over to Jersey. New
Oh,
York area still,
Oh,
but
yeah.
just
So
moved to
so so
Jersey.
so Gnostic, you're talking about probably actual headcount, like payroll headcount, employment in the
Yes.
city, and
Yes. Yep.
I'm sure we could chat GPT that. I don't know the answer to that. Jared, do you have a perspective on that?
no, I don't.
Mm,
Well, I had a whole bunch of people that ended up having to take the ferry over in the morning, living in Lower Manhattan, and just grab the ferry, take the tunnel,
yeah.
whatever they had to do. They were now commuting, and they did not like New Jersey taxes. Property taxes were insane.
Nope.
But
So yeah.
so now you've got everybody moving down to Florida, and they can work from home. So I think the hollowing out of New York as a result of taxes, all the rest of the stuff, attitude, and what's been going on for several years is just hollowing out New York completely. And now you end up with the evolution into a communist mayor who now makes it even worse. And now basically, who wants to be in New York? I mean, it's hard to live in New York, even at the good times, even when the times you were talking about, where here's Julie, it's the end of the Giuliani period. Bloomberg is mayor, and it's all fun, and everybody's they're little bitches about everything. I mean, just it's New York. I mean, you bitch about everything. You find something to bitch about in New York. But otherwise, it's not New York. But the vibrancy of New York has just started to decline on an ongoing basis, and you just look around and go, you know, it's ghettoized process, and heaven forbid, bring Giuliani back and start catching the turnstile jumpers, because that's what cleaned up so much of it so quickly. It was just stunning. I have 4 friends now who have been bushwhacked on the trains, right, and they're basically disabled for life because of it.
Yeah, and
Um,
not and not so let me pile on. I just looked it up while you were talking. So in 2023, the top 1% of the population paid 41% of the income taxes in the city of New York. It was I think 43% a couple of years ago, but 41%. And statistics for this New York State are not much different. And what's happening, and Jared, you can speak to this. How many of these New York assholes? I'm going to call them that just because where I grew up for such a long time in Massachusetts, we call them, as you know, massholes. But how many of these annoying people from either Massachusetts or New York wind up showing up in your hood, with their plates and are moving down your way, Jared? You see a lot of displaced folks from the Northeast, Jared?
Yeah, but it generally tends to be blue collar folks that move to Myrtle Beach. It's a guy who lives in Brooklyn who's a plumber or an HVAC guy. He bought his house in 1979 in Brooklyn for $70,000. He sells it for 900. He comes down to Myrtle Beach. He buys a place for 350, and he lives on the balance. Like that's the typical New Yorker that you get in Myrtle Beach. In Charleston, that's where you tend to get more of the high class people that move down there. So
So they're more likely to go to South Beach or Charleston or a place like that. So no, but Nasser, you're completely right. I mean, I live, 20 some odd miles from the city, and I go in as little as I can. I mean, there is really nothing there that interests me, very little. I mean, okay, fine, you still got Carnegie Hall, and the restaurants, honestly, they're absurdly expensive. They're just as good as places out here. You go in the city, it's dirty, it's crowded, it's not safe. It's god awful. And it's really, really sad. Because, Jared, I think you hit the nail on the head. I mean, New York has just lost its spirit. And it's just, I don't, and Jared, here's the question. Jared or Dostik, I don't know how you reverse this. I mean, if anything, you get a mayor like this, you're putting a foot on the accelerator, but it's just really sad. I don't know. I don't know. I mean, you see any hope, Gnostic or Jared, for New York City?
I mean, if Cuomo pulls it out, there's hope. But if this guy wins, last one out, turn off the lights. So
Yeah, and I don't know if Jared, you or Gnostic, people point to London in the UK, and I don't want to get into politics, but here we go. Why not? We never go into politics in this room, but people point to what's gone on in London, and UK is basically with all the. We shouldn't go there. We're going to start a food fight, and not with you, Jared, but I don't want people throwing shit at me because I still am on Twitter. So let's not go there. It's also 6:12, and then we're gonna end this room in a few minutes. But no, I just think it's really sad what's going on in New York and in Boston, which relies upon they have different problems, but I don't know if this is a captured national attention, but the particular problem in Boston is that such a large portion of the tax revenue comes from commercial real estate, and Boston commercial real estate's gone off and only, and so I don't know what's going to happen. Not to mention the fact that the Massachusetts state budget, it may not sound like much, but I think they've spent $1 billion. Relative to the size of the state's a big number. $1 billion in the last year on all the illegal immigration. You saw the pictures. Remember, Jared, months ago from folks sleeping, on the floor in the international terminal of Logan Airport because there's nowhere else to put them, and blah blah blah. I mean, people are going to throw stones at me, but I don't know. You don't have to respond. I just think you're looking at the breakdown of society. Thoughts?
No,
Anyone?
no disagreement.
Yeah, which is good for PE ratios, right?
Yeah.
Hey, Jared, I don't know. Nasik, if you got another question, that's great, but we've been going at this for over
I
an
was
hour
just going
now.
to say, White Plains is a great place to live. It's still good. Good shopping, good people, good most
Yeah,
of the
yeah,
stuff. Good
yeah,
police
no,
department. I mean,
yep, it's all good. And I
you know,
wouldn't, you
every
know what's
time I
awesome? Yeah, sorry, go ahead.
every time I fly over White Plains, I kind of look down and go, oh,
Yeah,
okay, but well, move my place. Phone up the tenant and go, do you want to move? He's like, no, no, I'm going to stay
no,
on down. It's like, yeah,
no.
okay.
And the other thing you should tell them too. I mean, and this is another thing, Jared. I don't know if you notice. You probably just stay, in Midtown or not really Berkeley. I know you whatever, but you come out in the burbs, especially out here with Metro North. I mean, they're putting up all these towers, like residential towers near the train line. So I mean, my God, you just jump on the train, you're in Grand Central in 30 minutes, and you go into New York once or twice a week or whenever you need to. I mean, and the quality of life is much better. The cost of living is much better. I mean, who needs a city? I'm sorry. I mean, Jared, it'd be one thing if you and I were still 28 and the city never sleeps, but we're too old for that now. We don't need that. So I don't know. To me, it just seems like a lost cause. All right, we got ladies on film in the
Hey,
room. Ladies on.
George,
Sorry.
George,
Yeah. Yeah.
I do got
Yep.
to go. I gotta head
All
to a
right. All
dinner.
right. All right. All right. Jared, hey, thanks so much. This has been great. I hope you enjoyed it. We all learned a lot. Let's do this again. Jared, we'll talk offline. We're going to carry on for maybe 5 more minutes, then we're going to go. So thanks, Jared. You take
All
care.
right, thank you, George.
Be
All I
good.
wanted to say was congratulations on your book.
Oh,
That's all
thank
I
you.
wanted to say.
All right. There you go. You silent fans. All right. With that, we are going to close the room. So everyone, tomorrow, hey, Dilly, I can't even remember. Like my mind is scrambled. We have someone tomorrow. David Keller. Great technician. He'll be on at 5. And then on Thursday, oh, yes, Dilly, on Thursday, we have a real shipping guru, not a guru,
Oh,
a guru with
oh, shipping
pictures
containers.
live.
I'm just
Yeah,
very cool.
containers and tankers and pictures from live from the port of so
The port.
anyone, no one is allowed to post anything about shipping. It's unless they come to this room. So Dilly, I know you've always wanted to know about ships, and Dilly,
I can't wait.
the question I'm going to give you a question you can ask him. Okay, you need to
Okay.
ask him because you probably don't answer. It's not a little bit. It's a question for him. Dilly, you need to know. You need to research this. What is the difference between a ship and a boat?
Okay.
They are different. Okay, so Dilly, thanks so much. Gnostic, TX, everyone.
George, I
Yeah,
just want
yeah.
one thing to add, if I
Please,
may,
please.
add my usual
Yes.
blurb.
Yep. Go for it.
Given the pissing fight that is going on between Trump and what's his name, Powell, it seems pretty obvious that in May of next year, he's going to nominate a puppet who will obey his orders and will cut rates to the bone, regardless of what the economy looks like, strong, not strong, or whatever. So I think it's pretty much a no, and it doesn't care about the currency either. So and I think it's not financial advice, but if you position yourself to have something that is sensitive to rate cuts when Powell leaves, it's very easy and it's asymmetric because you don't have much risk. So that means essentially you buy a 4-year piece of paper today, which will be a 3-year piece of paper when Powell leaves, and which will benefit tremendously by the cuts that will be enacted by his monkey. That's my view.
TX, I agree with you, but I got a better trade for you. I think you need to get longer Sardinian real estate.
Yeah, I'm working on it. I mean, it's not that
All right.
it's not that easy to find.
Too liquid. You got to find one of those secondary brokers in the West Coast. Huh? Okay. All right. Listen, TX.
Dilly, Gnostic, ladies, everyone, this has been great. Dilly, tomorrow, 5 o'clock, David Keller. Good night, everyone.
Good night.
Good night.